All right, there we go. We are recording. So yes, thank you for coming and joining Jerry and I today. We are going to dive in and just have a quick little presentation here on buying your first investment property and why you really should have a real estate investment plan in place. So I'm LeeAnn Mohler. I'm with Elevate Realty Group Northwest, based out of Keller Williams here in Portland. And with me today, my co-host is Jerry Wilson of the Jerry Wilson Group with Cross Country Mortgage, lender partner friend of mine, and I'm super excited to be here. So Jerry, I will let you jump in and take off from here.
Great, LeeAnn. We'll certainly appreciate the invite and always enjoy talking about real estate and in particular buying investment properties. Quick background, I've been in the business for 30 years. I bought my first property in 1998 on 37th and Schiller, which is one block south of Powell, and I paid $31,000 for the house, and my PITI payment was $400 a month. And I ended up getting $400 a month for rent. So that house today is probably worth $400 and probably rents for about $1,500–1,600 a month. So this is a subject that I'm really looking forward to talking about this evening with you.
Absolutely. Awesome. Thank you.
And so we're going to have some slides here, everyone, and just kind of go through the slides, about kind of some strategies that I talk about with investment property. And we're going to get through the slides pretty quickly. Then after that, we really want to open it up for questions and answer sessions, because that's really where the magic of this webinar is, that we want to be interactive, that we want people to feel comfortable asking questions. So I'm going to go through some slides right now, and then we'll open it up for questions and answers. And LeeAnn, feel free to stop me if something you don't understand or you think I should revisit it again and talk to someone about or go into more detail. So with that being said, why should you have a real estate investment plan? Pretty much anything that you've heard me talk about. I do a lot of social media. I do a lot of these webinars. I get asked questions all the time. Is it the right time to buy real estate? And I said, if it's the right time for you to put your plan in place, I'm saying it's the right time to buy real estate. And I think that's first and foremost. I think potential investors get a little, they need to have a more of a simplified plan in place. That have a tendency to overthink it as far as what should I do, what are the next steps, and really sit down. If you have a spouse or a business partner, or you're doing this by yourself, is literally what is my goal for 2022? And if my goal is to buy an investment property 2022, how do I do that? How do I find the right team? How do I ask the proper questions? So first and foremost, I always tell people, have a plan in place. Second home versus investment property, get a lot of questions. Been certainly a hot topic in our industry, LeeAnn, over the last couple of years, because now with financing vehicles available and loan programs, that second homes can be part-time rentals as well with VRBO and Airbnb on there. That this will help offset maybe a second home purchase and some of the costs that goes into buying a second home, and kind of helps relieve some of that burden of making that entire payment on your own. So we'll talk about second homes versus investment property, but these are both great subjects, and it's questions that we get a lot lately. So second home versus investment pricing has changed to tiers. And I just got to shift something over a little bit because it's blocking my slides a little bit, but almost equal to investment property financing. Use rental comps from appraisal to help qualify for a loan. So again, there's been a lot of improvements from Fannie Mae and Freddie Mac, making it easier to buy second homes. Sometimes we can use partial seasonal rent to help qualify, but there is distinctly two different types of pre-approval process when you're buying a second home versus an investment property. Next, where do you start? What down payments required? Credit score requirements and debt ratio requirements. Again, this is a different process. Second homes, generally you can get started with 10% down, where investment properties, you have to have 20% down. And then credit score requirements, we're generally looking to get any type of robust loan products available. You'd like to be at 700 credit score, but we can go down, LeeAnn, as low as 680 on the credit score requirements. So again, fairly liberal credit requirements to buy either a second home or investment property. And then the debt ratio requirements, this is something that I'd like to spend a little bit of time. A debt ratio is how do I qualify for the loan? So they take basically your primary residence, or if you're renting a property, what that monthly payment is, plus any auto payments, any monthly credit card payments, student loan payments, and they divide that by your gross monthly income. Well, if you're buying a second home, we're going to add that additional payment into the payments that you're already required to make. So you're going to have the proper income to help qualify, basically if you have two mortgages, so to speak. But again, as I mentioned before, now with some second home products, if there's any type of track history on the property, we may be able to use some seasonal rental income, i.e. Airbnb or VRBO. But that is on a second home, you have to be a little more financially stronger, so to speak, because you got to qualify with two mortgages. The advantage of going with an investment property, although it's an additional 10% down, so it's at least 20% down, when we do the appraisal on that investment property, we also are required to do what they call a rent comp survey. And what that rent comp survey does, LeeAnn, it tells the buyer that this is what we think that the average rents are in the area. And so for an example, if if one of your clients are looking to buy and that rent survey comes in at $2,000 a month is what the average is, we get to use 75% of that projected rent to help qualify. So we would use $1,500 of that $2,000 rent comp to help qualify and help offset that debt ratio. So that's really advantageous to help you get into a rental property on it. And the reason why they use 75%, LeeAnn, is they just use a blanket 25% vacancy factor. So from an underwriting standpoint and a lending standpoint, we're already assuming that the property may be, out of a 12 months, a year might be vacant 1 month, or it might have some repairs required. So that's kind of factored into that vacancy factor, 25%. But again, to summarize, on a second home, you have to qualify with both mortgages, or if you're renting and the new mortgage plus any other debt. With an investment property, you get to use 75% of that projected rent to help qualify for the loan. Acceptable down payment. This is a question that we get asked a lot is, how do I come up with the down payment? And when we do our loan consultation, a lot of times people don't realize they actually have the means to come up with the down payment, but we might have to get a little creative. And a couple ways we can do that is we're doing a lot of HELOCs, which is a home equity line of credit on their current residence. And LeeAnn, you've seen prices, what they've done in the last 2 to 3 years. We're actually getting HELOCs for clients that were first-time home buyers a couple years ago, and they're tapping into their equity with a $50,000 HELOC so they can have their down payment to buy an investment property or second home. So that's a really creative way to do that, is to leverage your current equity and the robust market that we've had over the last 5 to 10 years in the Portland market to help ease that pain, so to speak, of coming up with cash, so to speak. But also another way we're doing it is 401ks. And depending on what the 401k is with clients' employers, that you can borrow on that 401k. Now, some 401ks only allow you to do it on primary residence, but we have seen other ones that will allow for second homes and for investment properties. And it's a hot topic right now, LeeAnn, because the financial markets, i.e. stocks, equities, have taken such a drastic drop this year, down about 30%, that we're starting to get these phone calls that people are wanting to take their money out of the equity markets and go into more of a hard type asset investment. And there's no better investment to do that, LeeAnn, than to do it with real estate. So we're getting a lot of those calls right now. And then that kind of segues into, liquidation of stocks and bonds, that I've talked about. And then the last one, you've seen me on some other webinars, LeeAnn. I like to talk about cryptocurrency, and been involved in that for, over 5 years now. And it's certainly a creative way for clients. And I think it should be one of the top questions agents ask during their initial consultation with buyer when you're asking them where your money's coming from. Oh, by the way, do you happen to have cryptocurrency on it? And that's another way to help finance the down payment and closing costs.
Real quick, Jerry, on that 401k, I feel like there's a lot of people that don't understand the value of that you're taking a loan against your 401k, but you're actually paying yourself the interest back. So it's just an untapped tool that I don't think enough people understand the value of that.
You know, LeeAnn, you're bringing up a great point, and I should elaborate a little more on that. Most 401k plans are going to give you either 5 to 7 years to pay back that loan, and most 401k plans are capped at $50,000 on it that you can borrow against it. But what better way so you still keep your total portfolio in the market if you want it in the market, but you're just borrowing against it, so it doesn't reduce any gain potential that could possibly happen if the market goes up, but you get to pay yourself interest over time, and it's a great way to buy real estate through your 401k plan.
Yeah.
So great point. Thank you for the reminder. And then self-employed qualification as well is just a little more in depth from the financing side, and our job and my job in particular as a loan officer. So generally what that entails, LeeAnn, is just more analysis of tax returns. So when we do a normal loan for a W-2 employee, we need last 2 years personal tax returns and the last 2 years W-2, and then the 30 days worth of current pay stubs. Well, when we have a self-employed borrower buying a second home or investment property, not only do we have to have the personal returns for the last 2 years, we also have to have the business returns. So underwriting wants to know overall, how's this borrower profile and what's their financial capabilities of buying property, but also how is the business doing? And that's certainly been a hot topic over the last 2 years, you know, going through a pandemic, coming out of a pandemic, because in general, most businesses were affected in 2020, but we're certainly seeing businesses now that they've just filed the returns in April, that the 2020 returns, that businesses are back on their feet and robust. And then we also will look at a profit and loss statement as well for 2022, just to make sure that the business is trending. So we advise clients or investors out there, just give us a little more time in that process. It generally takes an extra 24 to 48 hours, but we just like to do that work up front. And then what's going on in the PDX real estate market? I will talk a little bit my opinion, but LeeAnn, you're certainly the expert here. I've born and raised here my whole life. I told you I bought my first house many years ago in the 80s. I've seen this market be just a very robust market, you know, the last 5 to 10 years. I always kind of have this opinion about Portland. Out of the 5 major cities on the West Coast, Seattle, Portland, San Francisco, LA, and San Diego, we're still the cheapest major city out there. You know, up to about 5 years ago, we would see people relocating from the Bay Area or LA to come up to Portland because they just couldn't afford a home in those markets. But now we're seeing them come down from Seattle, even though Seattle doesn't have a state income tax. Property values are so high there, and property taxes are so high that the affordability of Portland attracts buyers. So I think that's a kind of a perfect segue. I think Portland's still a great long-term market to invest in. We have what they call as an urban growth boundary that always kind of limits supply of lots that are available for builders. We do a lot of financing down in the Arizona area and in the Nevada, in particular Las Vegas, where the land supply is much more robust. So I think Portland's still a great long-term market, and LeeAnn would love to hear your opinion about that.
Thanks, Jerry. And actually, to piggyback off of that, not only are we the least expensive major city on the West Coast, we have industry here. We have major players here that are bringing a lot of employees into our market. So as long as that is still going on, we definitely still we're going to be strong for a while. So as far as right now, though, I'm kind of going back out on you here, that the biggest thing right now is interest rates and what's going on with interest rates. And Jerry, are we hovering around 5.25, 5.5 right now ish?
Yeah, then and those are for owner occupied rates,
Sure.
LeeAnn. So we're starting to see the investment property go above 6 to 6.25. But
Okay.
what I didn't share at my opener when I bought that first house in '89 for
Oh, God.
$31,000, my interest rate was 11%, and I was happy to get 11% rate.
Good God.
So, and as you know, our inventory levels are still really low. So what we advise clients to do it is, if this is your plan, this is on your goal for 2022 or 2023, secure the asset. We'll try to get you the best interest rate available, but make sure you kind of lock in what that acquisition price is. And then personally, I think rates are eventually going to go level off a little bit on there, and kind of how our industry works is bad news is good news for rates. So there is a little talk about a potential recession, maybe coming up the next 12 to 18 months. So I think we'll see some relief in the interest rate market, and nothing says you can't refinance your house and lower that rate. But what's more importantly is, one, secure the asset, because we're not seeing rents going down anytime soon. So yes, 6% is a little higher than it was 6 months ago, but it's still a great rate in perspective.
Exactly. Historically, it is these rates right now, while the buyers that are out there hearing what's been going on the last couple of years, this makes them nervous, but historically it is still a very good rate. And what the rate's doing to the market right now is we are definitely seeing a shift. However, it's still very much a seller's market. And this shift that we're seeing, homes are, the competition is lessening. We aren't having as many showings when a house goes live over a weekend. And instead of anywhere from, 3 to 8 offers, we have 1 to 3 offers. I'm writing an offer tonight for a buyer that it's been on the market for a week and there's no offers on it. So for the buyers that are serious about getting into real estate as an investment, this really is affording them a great opportunity, a great time to jump in. So we have less competition, slightly more days on market, which then if they weren't priced competitively, that means there's also a possibility we might be able to offer in on a property under that list price, provided there's no competition. So it's definitely a case by case, but Portland market's still very strong. I don't have any fears that we're going to see anything bottom out or crash anytime soon. Everyone that I hang out with in the industry, we're still doing great for all these reasons we just chatted about here, Jerry.
Well, and I get asked that question a lot. Actually, had a mortgage company through 08, 09. Yes, that was a painful time, but we just don't have the inventory levels that we had before. And, something that is not being talked enough, and we don't experience as much, LeeAnn, here in the Northwest. But when you get down in those Arizona markets, you get down in the Vegas, I'm licensed in Texas and Florida's, you are now competing with large publicly traded companies like the Blackstones and BlackRocks, and they're buying up 30, 50, and 70 houses at a time out there to put in their rental pool. And so for that individual investor to go in there and to compete with that, because they're paying all cash, they're asking for 10-day close, no contingencies, no inspections. They are buying houses sight unseen because they already are budgeting 35 to 40,000 per house to do a remodel, to put it back on the market. And so we already know from the lending standpoint, there's a national shortage of homes out there for buyers, not only for primary residents, but for investors. But fortunately, in the Northwest, we're not competing with that type of institutional buyer, because they want to buy 30, 40 homes at a time. They don't want to do one-offs. So I think Portland, we're really prime for the small investor to get in there and get their first investment property.
I agree. Yes. There we go. So the funny thing is, this slide here, what does a strong offer look like? So when I created this slide a couple of weeks ago, literally the market has changed, this shift that I'm talking about. So again, the competition, it's case by case. Is it just us writing an offer? Are we competing against, 3, 6 other offers? So just some of the things that we would talk about, I would talk about with buyers, I will talk about with you, is it doesn't always just come down to price. That's what a lot of people have in their mind. Well, I can't beat an offer that's, $50,000 over. Well, possibly you can. I mean, we can look at all the other terms in the contract as well. Price is definitely a strong one, but maybe we shorten our inspection. Maybe we agree to buy the house as is. And also, a little side note on inspections. there are a lot of agents out there in the industry that will suggest waiving your inspections. I will never allow you to waive your inspection. You are opening yourself up to a potential lawsuit down the line, and we will absolutely do our inspections, but maybe we'll just say we will buy the house as is. We're just doing it for your own good, that your own knowledge. So we can shorten our inspections. We can buy it as is, depending on your cash flow availability. We can offer towards an appraisal gap, which is the difference between the offer and what the appraisal might come back at. If we're 50,000 over, could you potentially cover that gap from offer to appraised amount? We can do creative things like releasing your earnest money deposit. I'm getting into technical things here, but releasing your earnest money deposit. So there's a lot of things that we can do in an offer to make it attractive. Of course, I develop a relationship with that listing agent. I know a lot of agents in the market here locally, so I'm here to advocate for you and have open communication with them. So the strong offer definitely varies case by case.
Well, first of all, LeeAnn, I want to say thank you, because from the lending standpoint, anytime we see inspection contingency waives, we pretty much cringe. So kudos to you for advising your clients on that to still do a inspection. But something I want to kind of leverage onto your thoughts too is that at Cross Country, we do what they call a fast track underwriting process. So if we know investors are committed and want to buy in the next 4 months, we can actually put them through the underwriting process in advance. And so when you find that right investment property for our clients, I'm not issuing you a pre-approval letter. I'm giving you a commitment letter saying that we've already had the underwriter sign off on the income, the tax returns, W-2s, source of funds. So literally we're taking that closing date from 30 to 35 days, LeeAnn, down to between 18 and 21, because all we're needing is title, escrow, contract, obviously the inspection and escrow on it. So we have that ability to do so to help make that offer stronger for our clients.
And that is awesome. Working with you like that and being able to offer that is definitely a strong tool to have, for sure.
Well, great.
Yeah. Then we can go to the next one. So for me, when I talk with investment clients, there's a couple things that I need them to consider. And Jerry kind of touched on this too, is so what is your long-term goal? Are you still in this state of mind that you want to buy and flip, or are you in now a state of mind of buying and holding? I really think we are moving into a market right now where buying and holding is going to be better. Homes are still expected to increase and rise, but just not at the rate that we've seen over the last couple of years. So first of all, your big picture goal, like what do you want this investment property to do for you? So there's 3 different options I just want to touch on. One is the Airbnb. That's the vacation rental by owner. That's a very hot topic around here. However, I just need to caution you. It has been so hot over the last couple of years that you will definitely want to do your homework and check with the governing entities to find out, one, if a home sells, will that short-term rental status transfer to the new owner? More times than not, I'm seeing it doesn't. Coastal cities like Lincoln City and Seaside, last I heard, no more short-term rentals. They will not allow any more short-term rentals to happen after a sale of a property. So that's definitely something to consider. Another thing to consider is if you are you wanting to buy a second home? Thanks to COVID and the change in all of our working environments, we can work wherever for the most part. So maybe you're just wanting to buy a second home, but as Jerry kind of touched on what that looks like as far as potentially having to pay 2 mortgages, what are you wanting to get out of it? Is it something that you're going to want to hold on to for years on end potentially, so you can earn that equity, since you wouldn't be getting that rental income to, as Jerry said, lessen the burden of 2 mortgages. So there's that option. And then the third option, which I really think is the winning opportunity right now for investors out there, are rentals. Jerry talked on rentals here in Portland. With those rates, there have been a lot of buyers that have now been, a lot of first-time buyers that have been priced out of buying in this market right now. So what that means is they're still renting. The law of supply and demand, we just don't have enough homes to purchase, nor do we have enough homes for rental. So now is an opportunity add to your portfolio a rental, whether it's a single home, if it's a duplex, triplex. Another thing too, condos, don't dismiss condos. I know people are put off by HOAs, but condos, we really think that with the way the market's been, all of these first-time buyers are really being pushed towards a condo price point. So my team and a lot of people I talk to, we are actually expecting to see condo prices increase over the next couple of years, because that's where buyers are going to be pushed to. So just a couple of things for you all to consider there. Basically, it's what is your big end goal? What's your big picture plan? And what's going to make the most sense? And of course, Jerry and I can go over all that with you personally, individually more. So, and then of course, on our next slide, the biggest thing for winning our offers is agent lender communication, having a relationship with Jerry, knowing that I can count on Jerry to follow up when things need to be followed up on, knowing that I can ask him to reach out to that listing agent and chat with them about my buyer's strength for borrowing. Very important. Have a good lender. Don't work with online lenders, please, for the love of God.
Well, you're speaking our language, LeeAnn, so thank you for that.
So, Jerry, unless you have anything more, I would really love to open it up to everyone out there. If you want to come off mute, or if you want to just put it in the chat. I mean, we really kind of just flew over a lot of information here. And so we would love to have this just be a open communication, open conversation now with you all, that if you have questions, go ahead and speak up. We'd love to answer them.
There's got to be a question out there.
Don't be afraid. Oh, Danny, what's your question?
Hey there. Thank you very much for the presentation to you both. I appreciate all the information. I tuned in a little bit late. I think I was about 10 to 12 minutes late into the convo. And if you don't mind going back on the slides to the beginning, I missed the part where you were talking about I think it was like the down payment piece, and like where to start. Yeah, the requirements. I'm in a weird spot where I'm self-employed. I own a food truck. And I also work for the city of Hillsborough. So I have a paycheck, and I also pay myself, and I own I'm self-employed in a way. So I just kind of wanted to see what options, or what would be the best avenue for me in terms of, should I do a home equity line of credit? What kind of down payment am I talking about, or are we working with? Does that make sense?
Yeah, and I can handle that one, LeeAnn. Yeah, Danny. So on the second home, the minimum down payment you have to have is 10%. And then with investment property is 20%. So generally what your first step would do is just schedule a consultation with me. We go through your application. I kind of do an overview of where the assets are, and then I can make a recommendation on my end. But to answer your question directly, the second homes require a minimum of 10% down, and then investment properties a minimum of 20%. But always know, the larger the down payment, generally the better the terms and interest rate you're going to get for your loans. But we can do a second home as little as 10% and investment property as little as 20%.
Understood. Cool. And actually, just on that same topic, so an investment property, that's considered a rental property, right? A second home would be a second place where I want to move into, or what separates both?
It's a really good question, Danny. So it all comes down to intent. So during our consultation, I'm going to ask you, what is the primary use or utility of the property? So if you say, hey, I kind of want a second home down in the Phoenix area, but I would like to kind of offset that payment, so to speak. So we would go down the road as a second home, and I would make sure the loan program that I put you in will allow for some part-time seasonal rental to kind of offset that payment. But we want to be forthright to underwriting and to your lender, and to what your initial intent is to that property. Now, sometimes clients will do is say, hey, I'm going to buy this as a second home. I don't want anyone living in this property or renting it. You go as a second home. Then after that 12-month period, there is no rules in place. So after 12 months, you can turn it into a full-time rental if you want to. And then that leaves you for another second home status purchase down the road.
That's very, thank you. That shed a lot of light on my question. I appreciate that.
Great question, Danny. Thank you.
Jerry, we have a question in the chat from Jason, which kind of sounds like it probably piggybacks off of Danny's question there a little bit, that he's in Redding. It's a tourist town, Redding, California, and he wants to invest in an Airbnb. How should he buy the home, second home or investment? So,
Well, I've got a big smile on my face because I think it's my friend Jason Miller in Redding. So I
yes.
hope this is you, Jason. And so I'm glad you joined us today, Jason. And so the question was, we could buy us a second home on there. Generally, the rule of thumb is it's got to be 30 miles distance from your current primary residence on there, or at some type of resort location. But underwriting is not going to let you buy a second home 3 blocks away. So that would definitely be in the intent of a rental property. So basics is 30 miles away from your primary residence or a destination location. Your intention is to use it as a second home, and then you want to do some part-time seasonal rental on it. Or if you just primary use is, hey, I just want to do VRBO 365 days a year, then that status is going to be investment property, and that requires 20% down. But we get to use the 75% of that rent comp to help qualify.
He's adding in that they have a ton of traveling nurses in the area. Is that considered the same?
Yes, then if that'd be traveling nurses, then we would want to go with the rental investment property purchase. Unless if you plan on using this second home, a couple weeks out of the month or a weekend out of the month, and then have some seasonal rental, that'd be okay. But if there's going to be a multiple turnover of seasonal rentals, then I would advise to do it as investment property. And I didn't get into it, but then I think there's going to be some more advantageous tax write-offs if you put the investment property in an LLC. And so I think that would be part of my consultation, that there's some more robust tax advantages if it's an investment property.
Awesome.
So Jason, just give me a call, or have Kelly give me a call, but I'm glad you're joining us tonight.
Mm-hmm. Let's see. So should I buy it with your company?
Well, no, yeah. So Fannie Mae, Freddie Mac, who regulates this, won't make a loan to an LLC, but we would put it in your name individually, Jason. And then once we close, turn it into an LLC. And that would be a conversation that you and I would want to have, because I'd want to know if you're thinking about doing additional rentals or just one rental. So it's a great question to ask. And it goes back to kind of what's your 3 to 5 year plan in real estate, and how you want to grow your portfolio. And then I can make a better recommendation if it makes sense to put in an LLC. But for liability reasons, I don't think there's a downside to put in an LLC. It's just a little more expensive to do, and there's a little more additional annual accounting when you file your tax returns. Great question.
All righty. Any more questions out there?
So LeeAnn, I think this is where you and I do the call to action. So ladies first, I think, this is our time where we call to action on next steps.
Yeah, next step, I would love to chat with you about your investment goals and what you're thinking and how I can help get you on the right path. We'll of course have you working with Jerry to make sure you're financially on the right path, and let's get this started.
And I will finish with this, LeeAnn. I've had the same cell phone number, 503-312-3332. Also, you can go to jerrywilsongroup.com and have a plan in place. Let LeeAnn and I help you with that plan. And it's never too early to put a plan in place. So if you're not ready in 2022, that's okay. If you're looking at 2023, 2024, still make the initial call. Let's put the plan in place today.
Absolutely. Yes, I love it.
Well, LeeAnn, I want to thank you so much for the invite tonight. Would love to do this again with you on it. Great job. And I really enjoyed the questions as well.
Awesome. Yes. Thank you, Jerry. Thank you, everyone. I really appreciated the time, and looking forward to chatting with you soon.
All righty. Have a great evening. Thank you.
Bye.